I want to show you something. Take whatever is in your bank account right now, any number, it doesn't matter what it is. Now imagine waking up tomorrow and 5% of it is simply gone. You didn't spend it. You didn't lose it in the market. You didn't make a single bad decision. It just disappeared. This is not a hypothetical. This is not something that might happen. This is what inflation does every single year to every single person who doesn't understand it. Hi, I'm Pooja Lama. Welcome back to The Money Mindset. In episode 1, we tracked $100 across 5 investments over 4 years. In episode 2, we looked at the 5 habits separating people who build wealth from people who don't. Today, episode 3, and I have been waiting to make this one. Because inflation is the most misunderstood force in personal finance. Most people think it is an economic news story, something that happens to governments and interest rates. It is not. It is happening inside your bank account right now while we're having this conversation. Let me explain inflation in the simplest way possible. Imagine a cup of coffee costs $2 today. Next year, same coffee, same cup, same shop, it costs $2.16. The coffee did not change. Your money just became worth less. That is inflation. The purchasing power of your money declining year after year. Now here's the part most people miss completely. The money in your bank account does not know this is happening. It just sits there, looking the same, feeling the same, while everything around it gets more expensive. $10,000 sitting in a savings account paying 1% interest in an economy with 8% inflation.
The silent is an erosion of inflation, thus the real cost.
Is losing $700 of real value every single year. Not because you spent it, because you left it somewhere that could not protect it. I want to give you real numbers now, not theoretical, your actual money. Average global inflation over the last 4 years, approximately 8% per year. If you had $10,000 in a standard savings account in 2021, and that account paid you 1% interest, your account today shows $10,400. But your $10,000 in 2021 needed to be $13,400 today just to buy the same things it bought in 2021. $3,000, not lost in a crash, not spent on anything, just quietly consumed by inflation while you were sleeping.
I thought this would be enough, but these numbers just don't add up. I really need to figure out.
And it gets worse. Because inflation does not just affect your savings, it affects your income. If you earned $50,000 in 2021 and you got a 3% raise every year since then, you now earn $56,000. That feels like a win. Except $56,000 today buys less than $50,000 bought in 2021.
You got a raise. You got poorer.
You got a raise, and you got poorer at the same time. So why does nobody explain this clearly? Why did your school not teach this? Why did your bank not call you and say, your savings account is losing you money every year? Because banks make money when your money sits still. Because governments need inflation to function. Because the entire system is built on the assumption that most people will never understand how it works. This is not a conspiracy. It is simply how the system operates. And the people who understand it protect themselves from it. The people who don't fund the people who do.
Energy becomes empowering. You have the solutions.
So what do you actually do about this? 4 things. 4 inflation shields, in order of importance. Shield 1, the one we already covered in episode 1, index funds. The S&P 500 has historically returned 8 to 10% per year on average. Inflation averages 3 to 4% historically, though it has been higher recently. The gap between those two numbers is your real wealth growth. Your money must grow faster than inflation, or it is shrinking, regardless of what the number in your account says. Shield 2, gold. We talked about this in episode 1 too. My $100 in gold returned 40% in 4 years. Inflation in the same period was approximately 32%. Gold slightly beat inflation. Not dramatically, but it did its job. Gold is not a growth asset. It is a preservation asset. It does not grow your wealth aggressively. It protects it from being quietly eroded. Shield 3. Real assets, property, REITs, commodities. Physical things with intrinsic value. When inflation rises, the cost of building a house rises too, which means existing properties become more valuable, which means if you own property or a share of property through a REIT, inflation is actually working for you, not against you. This is the fundamental difference between owning things and holding cash. Things tend to keep pace with inflation. Cash never does. Shield 4. And this one surprises people. Invest in your own ability to earn more. A skill that makes you 20% more valuable at work beats any investment return in the short term. A new certification, a language, a specific expertise. Your earning power is the largest financial asset you have, and unlike cash, it cannot be inflated away. Here is what I want you to do this week. 3 steps, 40 minutes total. Step 1. Calculate your personal inflation loss. Take what you had in savings 4 years ago, multiply it by 1.34. That is what you needed to break even with inflation. Is your account higher or lower than that number? That gap is your starting point.
First, enter your total savings. Now multiply by 1.34 to account for inflation over time.
Step 2. Move idle cash into an inflation-beating account. If you have cash sitting in a savings account earning less than inflation, move the portion you do not need for emergencies into a simple index fund. Even a small amount, even $50 a month. The compounding starts the day you start. Step 3. Calculate the real cost of waiting. Every month you wait, at 8% inflation, a $10,000 account loses approximately $67 of real value. Not visible, not dramatic, just gone. $67 a month, $800 a year. The cost of doing nothing is not zero. Inflation is not your enemy. They expected a different conclusion. Ignorance of inflation is your enemy. Once you understand how it works, once you know which assets protect against it and which ones don't, inflation becomes something that happens to other people's money, not yours. The people who built real wealth across every economic era in history did not avoid inflation. They understood it, and they positioned their money accordingly. Now, you understand it too. Next episode, I want to talk about geopolitics. And I know that sounds complicated, but here is the truth. Every major geopolitical event in the last 50 years moved the price of oil, gold, currency, and stocks. And the people who understood why made money while everyone else panicked. If this gave you something valuable, subscribe. Share this with one person who has money sitting in a savings account. They need to see this. And remember, inflation is happening right now, whether you understand it or not. Now you do. If this was useful, subscribe, because next week I'm going deeper. And remember, I'm not a financial advisor. I'm just someone who learned these lessons the hard way, so you don't have to.
I've been waiting for you. Next episode. Coming soon.